Are you a business owner in Canada and you are stressed about the upcoming tax season? In today's video, I'll be covering what your tax obligations are as a business owner so that you can stay compliant and hopefully get peace of mind that the CRA won't come knocking at your door. So let's get started. Tax compliance filing requirements as a business owner. To give you an overview, we will be covering personal tax returns, corporate tax returns, sales tax, payroll tax, as well as various tax slips. Let's start with personal tax returns. You may be familiar with the T1 individual income tax return, which everyone has to file if they have income. Regardless of whether you are a sole proprietor or incorporated, this T1 is something that you have to report. The tax filing due date is April 30th of the following calendar year, so your 2023 tax return would be due on April 30th, 2024. However, if you are a sole proprietor and self-employed, meaning that you and the business are considered the same, you would attach an additional form to your T1 called the T2125 Statement of Business or Professional Activities. The minimum financial report that you need to file for your business is an income statement, which basically means a summary of your income and expenses. And you don't need a balance sheet, which is a summary of your assets and liabilities, but will be required if you are incorporated, which we will be discussing in a bit more detail later on this video. For self-employed individuals, the tax filing due date is June 15th. However, your tax payment is still due on April 30th. And I know that this may sound confusing, like why would you extend the filing due date but not change the payment due date? But basically, the CRA wants their share of taxes sooner, but understands that it might take a little bit more work as a business owner to organize all the income and expenses by April 30th. So they give you an extra month and a half to file your tax return. Well, best case scenario is having your books, meaning summary of your income and expenses by April 30th, and then just file and pay your taxes by the date altogether. But if you really need the extra time, pay your estimated taxes by April 30th, and then clean up your books and get the accurate filings done by June 15th. Now, remember that if you underpay your taxes, you will incur additional interest payments on the underpaid amounts. So when you pay your estimated taxes by April 30th, make sure that you have a buffer room so that if you overpaid your taxes, you can actually get a refund later versus underpaying your taxes, which may result in interest. Tax installments. Now, one thing that completely slips business owners is the obligation to pay tax installments throughout the year. Simply put, tax installments are similar to how taxes were withheld from your salary as an employee throughout the year by your employer. This way, you have prepaid your taxes throughout the year, so you don't have a massive tax bill come tax time. And trust me, by then, a lot of people won't have the cash to pay their taxes because they would have spent it all. If you are self-employed as a sole proprietor, it is now your responsibility to withhold your own taxes because essentially you are both the employee and the employer. You will be subject to tax installments throughout the year if you have more than $3,000 in taxes due for the current year, so 2023, and the previous 2 years, which is 2022 and 2021. There are various methods to calculate your tax installments, and what tax installment option you need to make will usually be communicated to you via your tax accountant when you file your annual tax return. For more information on tax installments, I will be linking some CRA guidance down below in the description box for you to check out. Now let's move on to corporate tax returns. Once you are incorporated, you need to prepare an additional tax return called the T2 corporate tax return. More is required of you as a corporation, and you even need proper financial statements such as an income statement and balance sheet. An income statement is basically a summary of your income and expenses, and a balance sheet is a summary of your asset and liabilities. If you want to learn more about how income statement and balance sheets work, I do have a video that goes into more details, which I will link above here. You would also need a proper bookkeeping system in place in order to make sure that you are on top of your finances as a business owner. If you also want to learn how to do your own bookkeeping and even get a free bookkeeping template, I also have another video that you could check out over here. For corporate tax returns, you have up to 6 months after year end to file. So for example, if your year end is December 31st, 2023, you have until June 30th of 2024 to file your corporate tax return. Tax installments. For corporations, there are two options when making installments, quarterly or monthly. Make sure to talk to your accountant to know which payment frequency you fall under and how much installments you need to make. Tax balance due date. In addition to tax filing due dates and tax installment due dates, you also have something called the tax balance due date. This is similar to how sole proprietors can file by June 15th, but need to pay their taxes by April 30th. So when it comes to corporations can file by 6 months after year end, but need to pay their taxes or their tax balance by 2 or 3 months after year end. For example, if your corporation's year end is December 31st, 2023, then your filing due date may be June 30th, 2024, but you actually need to pay your taxes by either February 28th, 2024 or March 31st, 2024. Now, whether you get the extra month to pay your tax balance depends on your eligibility, such as whether you are a CCPC, a Canadian controlled private corporation, and make less than $500,000 in taxable income per year. But make sure that you check your eligibility with your accountant so that you pay your taxes on time and don't incur interest on underpayments. I know that this may sound very confusing with multiple deadlines. Basically, the tax balance due date is CRA's way of getting their share sooner and then giving you some extra time to file your taxes at a later date when your books, such as your income statement and balance sheet, is finalized. Sales tax. Next, we'll be discussing sales tax, primarily GST, HST, as well as the PST. To give you a bit of background, sales tax is charged on goods and services, and it exists on two main levels, federally and provincially or territorially. In today's video, we'll focus more on the provincial sales tax. Some provinces have combined with the federal rate, resulting in something called the HST, which stands for the Harmonized Sales Tax. For example, Ontario has the HST using a combined rate of 13%. So the 13% combines both the federal and the provincial Ontario's rate together. Some provinces like BC have two separate rates. BC has GST, which is the federal goods and services tax at 5%, as well as the BC provincial sales tax called PST at 7%. And then when you combine the two rates, then it becomes 12%. In the case of BC, GST may be applicable, but PST may or may not be applicable. So you would need to look into the rules as to whether your goods and services would need to remit PST if you are in BC. As a business owner who is making more than $30,000 annually in taxable sales, you may be obligated to register for a GST HST number and collect GST HST on your goods and services from your customers. There are certain business exceptions, such as if you provide medical services, you may even be exempt from registering GST HST altogether. Make sure to talk to your accountant about whether you need to register for GST HST in the first place, and if you are obligated to collect GST and HST, you also need to know the rate that you need to be collecting from your customers. Let's go over some basic filing instructions for GST and HST. In most cases, you only need to file annually if your taxable supplies are under $1.5 million, but you also have the option to file monthly or quarterly. In the case of an annual filer, you need to file your GST HST return by 3 months after year end. So if you have a December 31st year end, then you would need to file by March 31st of the following year. And you might have suspected you may also need to pay GST HST by installments if you owe more than $3,000 annually. So make sure that you talk to your accountant about your installment obligations as well. Payroll tax. Moving on to payroll taxes, this will be applicable to you if you are an employee of your company and you employ others for part-time or full-time positions. As an employer, you will need to remit the following source deductions for employees: federal and provincial taxes, CPP, which stands for the Canadian Pension Plan, as well as EI, which stands for Employment Insurance. Note that if you are self-employed through a sole proprietor, then your taxes are covered through tax installments and you don't need to worry about payroll tax for yourself because as a sole proprietor, you and your business is considered the same. Also note that EI, or employment insurance, is optional for self-employed individuals. Now, for payroll reporting purposes, you need to remit the source deductions on a monthly or quarterly basis. And you may be wondering, how do I calculate the source deductions? Well, CRA does provide an online payroll deductions calculator that you can use, which I will be linking down below. There are also various softwares out there that makes calculating and remitting payroll taxes very easy, so also feel free to do your own research. Once you know how much to remit, you would need to make your monthly or most likely quarterly payments by the due date. You do have a few options, such as going to www.canada.ca/payments and then setting up an online banking, as well as pay a bill through your CRA My Business account. Payroll taxes can get complicated and can result in some hefty penalties and interest from the CRA if you get it wrong. So I strongly suggest that you talk to an accountant before you even set up payroll in the first place. Once the calendar year is over, you would need to file a summary slip called the T4 Statement of Remuneration Paid. The due date for this filing is by the last day of February, and we'll be discussing a bit more tax slips in just a little bit. Tax slips. The last tax compliance topic we'll be covering are tax slips. There are various out there, but we will cover the main ones that will most likely be applicable to you. You will be most familiar with the T4 Statement of Remuneration Paid if you have received a salary before. If you are incorporated, you would need to issue a T4 for yourself as an employee, and if you employ others on a part-time or full-time basis, you would also need to prepare a T4 for them. It's basically a summary of the salary paid in the year, as well as the total CPP and EI contributions made. Then you and or the employee would file tax returns based on this information. And note here that whatever taxes, CPP, and EI are paid and reported on the T4 is not the final amount. Once the individual reports it on their tax return and based on their other sources of income, you may need to pay more taxes or even get a refund. The T4 is meant mainly as a best estimate, but not the final number. And T4s need to be filed by the last day of February. Next tax slip is a T5 Statement of Investment Income. You might have received a T5 slip from receiving investment income, such as interest and dividends from your stock portfolio. You might wonder why this may be applicable to you. Well, if you are incorporated, you might pay yourself something called a dividend on top of your salary. So your company would need to issue a T5 to you if dividends were paid during the year. T5s also need to be filed by the last day of February. There you have it, tax compliance for businesses in a nutshell. I hope this video gave you some confidence with your tax filing requirements as a business owner. If you are a content creator, consultant, or coach looking for a tax accountant in BC or Ontario, contact us to learn more about how we can help you. All links will be included in the description box down below. Thank you so much for watching today, and I'll see you guys in my next video. Bye!